Okay, tribe, let's talk about what's happening, what's working right now. Stallion, I tried this Turo concept a long time ago, and I'm reminded about it on a daily basis because I actually still drive the pickup truck that I rented out to, a number of people who love to smoke weed, who love to drive it across the world and wreck it, and most importantly, not really pay a lot for it. And because I lost so much money in the depreciation of it, the wreck, and the cleaning bills, I've decided to keep it just so I can haul trash around. It's a great reminder of the things that I should never do again in my life. You, though, went a completely different route. You decided that you were not going to drop it off, meet people in parking lots, go repo cars after the fact that they don't bring them back, but hand it over to an operator. And we've been about a year, so I think it's time for a little year review here.
All right. Yeah. So let me stop sharing this really quickly so that we can talk this out. So the baseline is I had a 2015 Toyota minivan that we had loved and driven for 130,000 miles, and we were looking to upgrade our vehicle anyway. At that time, we have a paid off minivan. I could probably sell it for about $12,000. That was kind of the market at the time. And we had met and had friendship with a local operator who's running a 40 to 50 car Turo operation. And I just ran it past and said, hey, would you guys want to manage this vehicle for me? And let me just see, does this thing more than pay for itself? Could it possibly pay for our new minivan that we went ahead and bought in terms of the monthly payment for that? And thirdly, is this a much better investment than just going ahead and selling it outright at that time? So those are the kind of the thought processes. The parameters then is in order for this company to manage it for me, and we're talking from soup to nuts, like they do the online listing, they write out all the descriptions that, they know are high search terms and whatever on the Turo platform. They manage all of the maintenance and upkeep and all the communication with the renters. So that's the kind of operation that I'm working with here. They charge me a monthly fee along with a monthly overhead fee. And those two combined for the vast majority of the year was about $450. It was $410 for the year. And then it's just gone up to about $450 because of some increases.
$410 for the whole year or $410 per month?
Per month. I'm sorry. Per month. Right. Yeah. So it's like $200 for the management, $210 for the overhead is what it amounted to.
What's the most important resource that you have? If you really thought about this deeply, I think you'd come to the same conclusion that Joey and I did. It's time. In our newest book, What's Without Wall Street, The 3 Steps to Financial Freedom Through Passive Income, we talk about how are we tracking that time. Well, what is the thing that we can do to get more of that time back?
That's right. If you've ever been listening to our podcast and thought, man, it would be amazing if I could take all the things that you guys have learned over the last 10 years and just summarize them, put them in some way to easily digest them and take action, that's what this book is all about. You're not going to want to miss it. Go to wealthwithoutwallstreet.com/new book and get your copy today.
How much have you rented it for during this time?
So during that time, I'm going to actually bring up the spreadsheet so I can show you.
All right, so head over to YouTube. If you're not already watching this on YouTube, head over to YouTube. You want to see the stats. People always say you got to have the receipts, otherwise it doesn't. And it's not true. So Joey wants to prove it to me.
Yeah, show this guy what he's been missing out on. Okay,
I'm open. I'm interested. And somebody actually went in the Turo game because I sure did.
All right, and I'll tell you this: we're gonna share some resources at the end of this too. But you can see it's been a little over a year, like September 23 to September 24 is what we have listed here. The total amount of income was $14,733.
So that's how much money people paid you off the Turo platform. Is that before like Turo took their fee or after Turo took their fee?
That is before.
Okay.
And then the Turo fees, along with the monthly maintenance fees and everything else, is in the second column here under expenses, was a little over $7,100. So the net for that 13 months roughly is $7,625 for the total time frame. All right. So here's the question. Number one, it was profitable. which was awesome. It's completely hands off, which was also a plus for me, as knowing my investor DNA. I have to have somebody else operate the business. And then thirdly, we kind of do the math. Now, Russ, you're going to have to help me out with the math. Had I sold it a year ago, it would have been about $12,000 to my family, right? Use that however you want, invest it somewhere else, whatever you may be. But because we ended up saving it and using it this way, I just looked up, and I'll just pull up the the Kelly Blue Book here. It looks like the average third-party, private party value is a little over $10,000 today. So factoring these things in, what would you say is like the actual return on an investment? In fact, just walk through like how you would think about this return so that people can follow that.
Well, if you're trying to figure out, is this a good deal for Joey? One, I know he's just kind of rubbing this in my face all over the place right now because he's like,
look, I'm not having you share your numbers like to compare. Okay. At least I'm giving you that much dignity.
Yeah, I appreciate that. I'm a little bit salty over the fact that your deal made money and mine deal didn't. I get that. That's a big win for you. But I'm sitting here looking at some math, and let's share my screen. Let's see if I can do this. Hopefully it'll go to where I want it to go. So if you took $12,000, you put it in month one, and I just took your $7,600, I divided it by 12, and just let that be $633 a month. I know that you didn't receive it, like linear like that. And if you went and sold the minivan right now at $10,000 plus the $633 you got for the last month, that says that your annualized internal rate of return would be 50.12%.
I'm sorry. So could you say that again, Russ? What was the return?
50% return. You're welcome.
Is that good? I mean, is that good, Russ?
I mean, compared to what?
Exactly.
Compared to what is really what I'm trying to get after. Compared to what, compared to our land flipping business, it's okay.
It's good. Yeah.
Compared to the private loan that we just did and earned 20%, 22% in 2 months, not as much. Compared to the 2 cars I bought on Turo, lost $30,000, had to repo a car teaching my kid that. I mean, there's life lessons there. And
put a dollar amount on that.
And the amount of comedy that we've had on this podcast at my expense. Yeah, I'd say that's pretty good.
But let me break this down for you. So big lessons to be learned. Number one, the type of vehicle that you buy matters. And we interviewed Aubrey Janik on this very topic months ago. I don't remember how long ago that was, but she did a great job of identifying that you have to be very strategic on which type of vehicles you buy and make sure that they are low maintenance, but high consistent income earners. Like she really focuses on that lower threshold, which by the way, accidentally, I'm not trying to take credit here where it's not due. The minivan is a high demand vehicle in our area. At least, you need to check this out for where you're at, because people are going on long trips, like to Disney World, for instance, 8 or 9 hour drive from Birmingham. And they're consistently using our minivan to do it because maybe they need more space, or maybe they want something more reliable than their vehicle to go that long distance. And I'll just tell you, if you want to learn more about this strategy so you don't end up dropping 30 grand on a vehicle or two that didn't work for this strategy, go to wealth.wallstreet.com/cars, and you can actually get access to Aubrey Janik's podcast as well as her course that breaks down all these kind of hidden tips and tricks so that you could do it right from day one.
Yeah, she'll definitely tell you what to do and not what not to do. She may have used me as an example within her course, not knowingly, as she did that. All right, let's move on. I'm tired of you winning so much in this podcast. We need to show other things. So we get this question a lot. Hey, we're heading into the election cycle, right? As we record this, we're 20-something days away from the election where everybody goes to vote. And we're wanting to know, what types of things are winning, what things are not. Is there a possibility that I need to be considering other ideas? Well, we're not going to be your investment advisor ever. I'm not going to tell you what to do. We're going to tell you first, consult your investor DNA. If you don't know what that is, you need to go to what'sabouTwallStreet.com /free call, and one of our coaches can help you get exactly what that investor DNA is for you so that you can start lining up the things you're doing with money in relationship to who you are and the way God made you. But we are sharing every single month what we're doing, right? So this past month, just as an example, we brought in, Joey, a little over $54,000 in passive income, right? Those dollars that we didn't have to go work for, had nothing to do with our businesses. It was just a result of the money that we have invested, people we have invested in. And people are like, well, how much money did you guys invest? Well, based upon our spreadsheet, it's close to $1.8 million is what's been invested over time. And we're earning a return on that in many different ways. So let's talk about some of the things that you believe are working in our current cycle. And why do you think that they're working?
Well, I always want to start off with our land business, because our land business, to me, has all of the variables of a recession-resistant business. Okay, what do I mean by that? When people feel concerned about the future, they go to hard assets, fixed assets, things that they can kind of touch and feel safe. Dirt is one of those things. They may want it for a various number of reasons. Sometimes recreational, sometimes it's just for literally affordable housing. Like they want to own a piece of property they can pull a mobile home on, that can do an RV. Some people just want it for the possibility that they may need to relocate, and they're just uncertain about the future. But I think the second thing about it is that there's no real variables as it relates to, like, can something come through and like totally obliterate that land? It might knock down trees, but ultimately the land is still going to be there, right? And so it has these tenets that people want long-term that make this model super, super recession resistant. And if you don't know what we're talking about, we actually partner with thelandgeek.com, where they teach you how to actually implement this yourself. We happen to have a third party, the Land Geek team themselves, that runs this business for us as an operator, because Russ and I are not going to operate it. But this is how we learned the business, and this is how we implemented it.
Well, I definitely think as we head into election, we need to think about what will be volatile. Where will people go? Try to put yourself in the brains of the fringe world, right? I mean, I think the core part of our world is going to stay the same, but there's always the fringe that can impact things. You see that when we have market sell-offs, you have runs on banks. It's the fringe. It's the outliers that start doing things that ultimately start to adjust. That's what I think Malcolm Gladwell talked about in the book, The Tipping Point. When 10% of the people do something, it can have a dramatic impact and tip the course of whatever's happening. So with land, I mean, people, if they get nervous, they go out there and they, build their bunker on their land and they feel comfortable, right? So I think land's a great strategy. We've invested in a candle business. Joey loves candles, by the way, guys. If you go to his house, he normally has one or two burning. This time of year, it's a pumpkin spice. It's always something seasonal. He loves a little autumn flair. And I think right now, you think about as we head into the last part of the year, we're in the time where there's a lot of parties going on. There's a lot of purchasing. You got the natural Black Friday coming up. Consumables like candles typically do well in the fourth quarter. Most of the things that are sold online like that have great fourth quarter. So I'm expecting our candle business to continue to flourish. I mean, it's one of those things that's not a big driver on our passive income report. I think $600 a month is kind of where we're averaging right now as like our net. But Joey and I do nothing. Like, we have an operator who owns and runs the business and manages it well. The business continues to grow in value, and we get a little small shareholder distribution. I think that we'll continue to see things like that have an upward trend regardless of what happens on November the 5th.
Yeah, totally. The other thing that I'll say is a good trend, no matter the cycle, is it's always been and will always be private lending. Now, not private lending for private lending's sake, but I'm saying private lending with actual collateral behind it, something that is going to be profitable no matter what, something that has hard intrinsic value, and something that is the known operator, the known person that you're lending to has a track record and a character of being able to repay. Those are things that I learned in the mortgage business that, man, debt is a great way to build long-term wealth no matter the cycle. Because in good cycles, people want to borrow more money because there's all sorts of opportunities. In bad cycles, people want to borrow money because they may have an immediate need to take care of a concern. But no matter what, as long as you do the proper underwriting, and again, don't just do this with anybody, anywhere, make sure that you're following a checklist. Make sure you're following an actual underwriting guideline to make sure that you've covered all your bases in order to do that loan. But once it's done, it's literally paying you consistently without a whole lot of oversight.
Well, the beauty of the debt is you control the asset without any of its risk. I mean, the person who owns the debt owns, in essence, the asset, because if they quit paying on the debt, then you ultimately are the default owner of it. You get all of the capital, the return off of it. You're first in line to the people who get paid off. There's a lot of value in being on the debt side, being able to control it, but not having to be responsible for when things break. If it's for instance, like a home or a building or something like that. I like the debt. That's a smart play. The other part that I think that's going to be, in a market cycle like this, you start looking for the trends. We know that we have a shortage in housing. So if you can find any sort of ability to get yourself into the affordable housing world, the rental house market, and Joey and this is not something we do a lot of, so it's not something that you're going to see on our report, but I can read the stats. We had Bob Frazier speak to us when we were out in San Diego at our Passive Income Mastermind, just talking about the gap we have in the amount of housing available and the number of people in the country, people coming into the country, for instance. We are going to need more and more housing. So if you're one of those people who loves real estate and you want to be maybe a landlord, or you want to get into management companies, we've had our friends over at Spartan Invest. It's a local business, but through thousands and thousands of rental properties for people all over the world. They just happen to be located in our backyard here in Birmingham. There's great people to talk to, but you need to look at if that's the world that you want to be in. I think there's a real opportunity to see it. I mean, just near my neighborhood, less than 2 years ago, they built about 75 homes. It was a build-to-rent community, meaning every one of the homes that were built in there were built immediately to turn around and rent. And within like 6 months, they're all gone. They're all rented. And it's just it's a money printing machine. I mean, it may be harder and harder to find those, but I know that you see that the multifamily are struggling to get more and more permits. Just in an area near me, I don't know if you guys follow the Nextdoor app inside of your communities, but I'm on one of those, and there's a multifamily complex that's trying to go in not too far from us. And I mean, you can see people lighting up that Nextdoor chat right now, just wanting to keep them out of there. They don't want that multifamily. So that's good if you're in multifamily already, meaning that your stuff is going to be more valuable, that you have fewer supply coming online. But also I think it's more an opportunity for some of these build to rent type places, or if you're buying property and you're renting it, I think you'll see that those over time will continue to prosper. You just need to know, are you an operator? If you are, build your systems, or find your operator who already has a system and just invest through them.
There was nothing worse than walking into class when you're in school and the teacher saying, "Pop quiz day." Why? Because you were unprepared. Are you unprepared, though, for financial freedom?
Don't be. Find out how close you are by taking our 30-second quiz at wealthwithoutwallstreet.com/quiz.
So let's talk about the things that may be affected during this volatile cycle. And I want to stay on that affordable housing train just for a second, because it's super advantageous, but there are risks associated with it. And we just actually experienced one. So, for instance, the mobile home park deal that we're in, it's a great deal. It's been paying out consistently until geographically it was just affected by Hurricane Helene. It's located largely in South Carolina, and man, it just got really affected. So all of those distributions got halted temporarily while they figure out exactly what the extent of the damage and what the extent of the people who are affected in those neighborhoods. When you're dealing with real estate, you're dealing with people, there are geographic issues that could happen. And the Southeast is a really strong market for affordable housing, but it also is prone to big storms, and things that we've seen very recently are affecting it. So just to let you know, like, those are things you have to factor into your investing profile. Is this can't be all of your, eggs in one basket, so to speak, because one geographic area is too kind of open to those sort of things happening.
So I was listening to one of my favorite podcasts, the All In podcast. I'm just regurgitating in a less intellectual ways that what they did. But you're seeing a lot of these storms and hurricanes getting bigger and bigger. And there's a lot of reasons why. One of the reasons why they were sharing is that about 3 or 4 years ago, they forced these companies that were making these boats out of this certain sulfur or whatever. I'd have to go back and listen to it. But there was a specific chemical being that was in the coating of these machines, and then the type of fuel that they were burning with inside of that would create this cloud cover as they came across the oceans, would reflect the sunlight, which meant that basically the surface of the water temperature stayed a little cooler, but yet it was, creating acid rain and other things that was bad for the environment. So of course they're trying to get rid of it. Well, as a result, they're seeing temperatures in the ocean, Stallion. I don't know if you've heard this episode or not, that they're seeing the temperature in the ocean rise. So what was good for the environment to get rid of this acid rain is actually creating a higher temperature inside the ocean, which is creating bigger and bigger storms. And so when we see some of these huge storms that's hit Florida, I think we've had 2 this year. You've had, obviously, it came through and went all the way up into South and North Carolina, as you were talking about. And whenever those storms hit that cool air, it just dumps all that rain, which created this catastrophic issue that we have up there. People were not ready for it. I think one of the things that we have to consider in the real estate that we own is, can we afford the insurance to go with it? And so I would think that that's going to be one of those areas, especially if you're investing in projects that are in the Southeast, looking to see what are those insurance costs, how much have been baked in, are they using best estimates based upon lower pricing. What would happen if the price of their insurance doubled or tripled or quadrupled? Because we're seeing storms that were maybe 1 in 100 years or 1 in 500 years happening maybe 1 in 30 years or 50 years. And what will the pricing on that insurance do to everything?
Absolutely. Another trend that I think we need to be thinking about, and I'll just be honest with you, I don't know 100% which way it's going to go, is just what about crypto, right? Going into an election cycle, you hear the candidates talking about this is like technology and, crypto-based assets. And in my mind, there's just a lot of volatility around it, because there's a one side of the coin where people are saying that the government is trying to vie for their own control of the currency, that it may be running away from them, with the aspect of Bitcoin being kind of off the grid from what they can see and control. But at the same time, you've been watching it over the last 5 to 10 years. It varies wildly. I mean, up and down, up and down. And you've seen our Bitcoin mining fund. In fact, I'll share the report again. It's not fared very well, despite the fact that we've seen Bitcoin pricing going up. The actual profitability of the mining fund has not gone up.
Wait, when you say it hasn't gone up, so if we look here at our numbers, Stallion, our fund, we put in $175,000. Is that correct?
That's right.
And what did it produce last month?
Last month was $469.39. If you converted the Bitcoin that was mined to US dollars at that given time frame.
And given the fact that we see the price increase and has continued to increase since 2020, now we're over $65,000 as we record this episode. We see it increasing, but yet the mining is not. And there's a lot of factors for that. I think one of the factors is that energy has, quadrupled in price. And so that was just going back to what are some of those underlying things you have to watch out for when you're investing that you're not considering, but the energy, the labor involved, the insurance involved, those are some of the things that can determine whether or not something will succeed or fail and how are they priced in. There's been so much regulation around energy. We are seeing that the price to manage these mining operations have gone up, even though our price appreciation, right? If we would have been, I guarantee you when they were doing this analysis a couple of years ago when we invested in it, $65,000 today would be a good price point. Because I think when we first started investing in it, the price was somewhere around 30,000. So we're doubled in 2 years. That's a 30-something% year over year return on the currency itself. But yet we're not seeing that much return out of it. And it's those little underlying factors. You do have one, Trump, I know you've seen this, Joey. Trump says that he's going to make America, the crypto capital of the world. I don't know what that means, but assuming, so it seems like he's pro crypto. So you would think, man, that would be a win for crypto. Will it be a win for us at mining? I don't know. Not unless we figure out a way to reduce the cost of energy. I don't see how they're going to do that. Then you've got the Democratic platform that's saying, hey, we're investing in all this AI technology. We want to be a part of digital assets. But like you said, I think there's a decent skepticism that maybe the digital assets they're going to want to invest in are going to be ones that are going to be like the central banking digital currency and not a Bitcoin type platform. So then does that mean the price goes down? I mean, it's one of those issues that I think in a volatile market, it'll be interesting to see how we get out of this decentralized currency that we're in with the U.S. dollar and other dollar-denominated type asset classes as compared to these digital coins. Will they work? Will they win overall?
Right. Yeah. So just something to keep an eye out. We don't have a fundamental final assumption either way, but just something that we're watching that will be affected. We just know that there's going to be some sort of positive or negative to that.
Another thing that just update you on, you listen to these podcasts. I love the fact that you comment on the YouTube, and when you see stuff or you don't see stuff, you ask about it. Appreciate that. That means that that this is something that you're interested in. Anytime we see that question, you've asked us about our ATM fund. You said, hey, does it look like you guys have gotten a distribution on that lately? And you're right. We haven't had one since May. And I don't think I'm prepared to give you an answer as to all the reason why we didn't get one. But I can tell you that there's basically a settlement happening right now where the fund manager of those ATM funds are trying to basically buy out all of the people like us that are in there to take over full ownership of them and to run them. And so I don't expect us publishing an ATM distribution anytime soon, Stallion, but maybe we will publish that we received back a settlement offer and cash in the bank, and then we can decide what we're going to do with it from there.
Yeah. And I'll just tell you, my perspective on this is that this is a business that we invested in, and one that had been paying out for almost 13 years consistently every single month. And it tells you that even though something has always paid out or been consistent, doesn't mean it's always going to continue. And it could be, again, we don't know for sure 100% all the ways that this got affected. But one thing that I can tell you that I've been told is that the operator kind of was expecting some capital to come through on a new kind of tranche of ATM investing. It didn't come through at the last minute. And instead of him cutting losses on that particular tranche, he kind of stuck his neck out, put more capital of his own or from the business into that, and subsequently wasn't able to then start paying all of the investors along the way. And what the downfall of that is that, man, as soon as those distributions didn't come through on the first investors, the people that have been in this for years and years, like us, that all of a sudden confidence goes away. And when you lose confidence from your investor base, you might as well just write off the business. Like, this is not something that's going to be easily brought back. And so there's like this implosion of sorts that happens. And so, man, it's so important to know that you've got the right operators, the right business plan that really lines up with who you are, what you're looking for, and that there's even some backdrops against if things don't go according to plan.
But Joe, I think the key is in this, and it's so hard, right? Because I think the question that would be going through my mind if I was listening to you go through that is like, well, crap, you said earlier that I need to investigate the operators, see their track record, see how well they've done. And you then turned around and said you invested in a operator that seemed to be proven, 13-year track record, had success, and then all of a sudden made a mistake, and that mistake is then costing distributions to you as an investor. That seems to be really confusing. That seems to be hard. And Travis, you're listening to that, it is hard. Investing is not easy. It is very, very difficult. Now, is it important? I think it's important, right? Because otherwise we hand over this to someone else. We advocate this responsibility to someone else. And then we're right back to where we were before we started trying to invest on our own, before we started trying to create financial freedom faster, before we got out of Wall Street with the purpose of trying to spend more time with our family, because we knew that our passive income had to get to where it exceeded our monthly expenses. I think lessons that you learn within this is that you have to continue to find places to put your cash that give you more and more opportunities to win, but at the same time, not betting all on one thing, right? Because if you bet it all and it doesn't work out, then you have a much bigger opportunity to go right back to where you were. So small bets, continue to learn. Now, if you have more and more control over the operation, that becomes, huge ways to invest more and more. But I think, finding good things that meet your criteria, that inside your investor DNA are ways. So Stallion, one of the things that we're asked a lot is, can people invest with us? And up to this point, we've said no. Our job is to teach you ways to become financially free, help you build your own passive income operating system, get out of the antiquated model that's basically the DMV of your finances, right? Get into a model that's working more efficient, more effective. And if you haven't done that already, go to what'swhatwallstreet.com/PIOS, passive income operating system, what'swhatwallstreet.com/PIOS. You can download our ebook. We give you literally the playbook that you can install into your finances. And it's what's allowed Joey and I to do exactly what you're seeing on the page right now. It's what's allowed us to build over $50,000 a month on a reoccurring way, automated, because now that system is installed. It took us a little bit on the front end. We had to organize our cash flows. Then we had to find a place to store the cash. Then we had to automate it. But once that's done, it literally can turn active income into passive income while you sleep. But one of the things that we wanted to do is, as we are growing and finding ways to build one of the, I think, most effective businesses we've ever built, which is the insurance agency business that serves the need of helping people implement the infinite banking concept in their life, is we're finding that there's a lot of smaller insurance practices out there that are just doing this in their hometown. They're doing it doing it well, but they feel isolated. They need others to come along and help them. They don't have a system like we've been able to build here. And so we're finding some of those insurance agencies that are looking to sell into our company. And so what we're going to do along this path is give you, the accredited investor listening. So if you're an accredited investor, you need to go look exactly what that criteria is. We're going to give you an opportunity to not only invest alongside us, but with us. We're building out and have built out a debt fund that you can invest in that will pay you monthly income, that is a debt fund obligation against our very profitable business. And it will be paid monthly every single month. And it'll be either a term of 3 to 5 years, depending on the situation. But if you'll go to wealthwithoutwallstreet.com, I'm sorry, Joey, if you go send us an email to info@wealthwithoutwallstreet.com, it just put in the keyword accredited. Somebody on our team will send you a one-pager, give you all the details on it, and can jump on a call with you to help you figure out if that's a place for you to either get your first passive income coming in or just be an additional stream for you.
Right. And again, it's the idea that you can't necessarily invest with us, alongside us, in terms of the things that we're investing in and you see on a report, but you can invest in us. And the things that, if you believe in our infinite banking process, the idea of building a passive income operating system, and you know more people need to set this up for themselves, then you know the opportunity ahead of us and the reason for this need to expand. So we're grateful that you listen each and every month and that you're getting value from this. Otherwise, you could have chosen to listen to anything, and you chose to listen to two knuckleheads from Alabama. But man, we're grateful for you. I hope this report has been helpful and that you are seeing your own passive income increase month over month, year over year as well. If you will, do us a favor and share this with your friends. Get the word out. Help us to beat the big tech algorithm by giving us a review and allowing other people to find the gold that you find here day in and day out. Thanks as always. We'll see you on the next episode.
This has been the Wealth Without Wall Street podcast. Don't forget to subscribe to the show to break free of the Wall Street mindset and begin building wealth on your own terms in places you understand so that your wealth will never run dry. See you next episode.